Welcome back to Rich Owl. 7 stocks, $18 trillion, 35% of the entire S&P 500 by market cap, the highest concentration in any major index in 70 years. Microsoft, Apple, NVIDIA, Amazon, Meta, Google, Tesla. The math calls them a single bet wearing 7 outfits. Every time markets have concentrated this much in a small group, they crashed first and dragged the index down 60%. This is Rich Owl, where we break down the stories Wall Street wants you to ignore. Today I'm going to show you that the Magnificent Seven are not a diversified bet. They are a single interconnected trade. Inside the Mag 7, the wiring is already starting to short-circuit. 3 things in the next 8 minutes. First, why 35% concentration has historically been the textbook signal of a top. Second, the circular wiring inside the Magnificent Seven that ties their fates together. And third, the trigger and 3 boring assets that historically rally when megacaps crash. There has never been a market structure like this before. In 1968, the top 7 stocks made up 16% of the index. The Nifty 50 era. From the 72 peak through the 74 trough, the largest 5 names crashed 60 to 90%. The index lost 48%. In 1999, the top 7 names made up 20% of the index. Microsoft, Cisco, General Electric, Intel, Walmart, Exxon, Lucent. From 2000 to 2002, the top 7 lost on average 66%. Cisco lost 89%. Lucent lost 98%. The S&P 500 lost 49%. In 2007, the top 7 names were a little over 15% of the index. 2 years later, the index was down 56%. Now look at 2026. Top 7 names are 35% of the S&P 500. The most concentrated reading in any modern American index since 1965. To replicate the Mag 7's combined market cap, you would need to buy every public company in the UK, Germany, France, Italy, Spain, Netherlands, and Japan combined. 7 American stocks are now larger than 7 major industrial economies. Here is the part that almost nobody is discussing. The Mag 7 are interconnected through one revenue stream they all depend on: AI infrastructure CapEx. Microsoft spends $90 billion a year buying NVIDIA chips. Meta spends $65 billion. Google spends $80 billion. Amazon spends $100 billion. Tesla just announced a $15 billion AI training cluster, also buying NVIDIA chips. Out of $725 billion in 2026 hyperscaler AI capex, more than $400 billion ends up as NVIDIA revenue. When NVIDIA reports $47 billion in quarterly revenue, 50% is coming from the other Mag 7 companies. Microsoft justifies its premium valuation on AI revenue, which depends on Microsoft's own investment into OpenAI. NVIDIA invests in OpenAI directly. OpenAI uses Microsoft Azure. Microsoft buys NVIDIA chips. The same dollar passes through 3 balance sheets and gets booked as revenue on all 3. The technical term is circular revenue. The polite term on Wall Street is the AI flywheel. Once you net out intercompany spending, actual external AI revenue is around $50 billion, against $700 billion in capex. That is a 7% return on infrastructure that depreciates in 3 years. And the people who built these companies are seeing it. Jensen Huang has personally sold over $1 billion of NVIDIA stock in the last 6 months. Mark Zuckerberg has sold $2 billion of Meta. Jeff Bezos sold $3 billion of Amazon in February alone. Combined, the Mag 7 CEOs have personally sold $7.8 billion in 6 months. What triggers the collapse? One missed earnings number. The Mag 7 are priced for 30% annualized growth, indefinitely. Forward PE on Magnificent 7 is 35. The rest of the S&P 500 trades at 21. If even one of the 7 misses revenue by 10% in a single quarter, the entire sector re-rates. ETF outflows start. Passive index funds mechanically sell. There is no human Buffett deciding to buy the dip. When the Magnificent Seven fall 30%, the S&P 500 falls 11% without any other stock moving. 35% of the index is just 7 names. There is no diversification anymore. 3 things historically rally when concentrated megacaps crash. Number 1. The equal weight S&P 500, ticker RSP. In 2002, equal weight S&P beat regular S&P by 23 percentage points. Same thing in 2008. Same thing in 1974. The equal weight index always outperforms during megacap unwinds. Number 2. Gold. Central banks just bought 700 metric tons last year. In 2000 to 2002, gold gained 15%, while the S&P lost 49%. Number 3. The boring dividend aristocrats. Coca-Cola, Johnson & Johnson, Procter & Gamble, Walmart. These do not depend on AI demand. They do not have customer concentration in 6 other companies. They have crashed only one time in 50 years. Stability is not exciting. It just compounds while everyone else loses 60%. The Magnificent Seven are not 7 companies. They are one interconnected trade with a single point of failure. The math is the math. Concentration always reverts. Insiders always sell at the top, and the boring stuff always wins when the exciting stuff crashes. Stay curious. Stay skeptical. Never confuse a great story with a great investment. I'm Rich Owl. Cheers. Stay curious. Stay skeptical. I am Rich Owl.